Hello, welcome back to Learn Oikonomia. In this video, we are going to look into the question why currency depreciation is still important. So we have to understand the difference between devaluation and depreciation and see why this is very important. The basic difference between the devaluation and depreciation both involves actually the lower rate of your present currency. I mean, the value of your currency is coming down. But in devaluation, deliberate attempt is made by the government or the central bank to reduce the value of your currency. But the currency depreciation is actually a fall in the value of your currency. It is nobody is making any attempt to reduce the value of your currency. But if fall is made by the adjustment in demand and supply forces. So a fall in the value of a currency is made in terms of its exchange rate with respect to other currencies. And depreciation, it would occur due to factors such as economic fundamentals. There would be depreciation occurring as a result of interest rate differentials. There will be political instability leading to depreciation, or there can be risk averse among investors. This kind of a feeling or this kind of a behavior leading to currency depreciation. We could see that there have been experience faced by many countries. There have been experiences of many countries resulting in currency depreciations as a result of weak fundamental economic fundamentals like chronic current account deficits or high inflation rate leading to depreciation of the currencies. And we could see that this can be a gradual process. Okay, this may improve a nation's export competitiveness, and this may improve the trade deficit over time. But an abrupt as well as a sizable currency depreciation, it may lead to many problems, especially with respect to the portfolio investment and all. The currency would be facing problems gradually. So these actions will put further downward pressure on the currency, and there would be easy monetary policy as well as high inflations leading to currency depreciation. When the interest rate becomes low, there will be what will happen is that hundreds of billions of dollars chase the highest yield. Expected interest rate differentials can definitely trigger currency depreciation. Central bank play a role here. Central banks can increase interest rate to combat inflation in the economy. So inflation can lead to high input costs for export, which would be leading to nations export less competitive in the global market. And this will be leading to trade deficit in the economy. So the cost here, and this again may lead to the currency depreciation kind of. In response to global financial crisis which happened in the 2008, what the Fed has done is that Federal Reserve embarked on 3 rounds of quantitative easing. We have already seen that quantitative easing is a method undertaken by different countries to go for devaluation, but this is a deliberate attempt. Following Fed's announcement of the first round of quantitative easing on November 25th of 2008, US dollar began to depreciate. Okay, and in 2010, Fed has embarked on QE2. The result was all the same. In 2010 as well as in 2011, we could see that a greenback hit all the time lows against Japanese yen, Canadian dollar, all Australian dollar. All of these things will happen. Coming to the political scenario of currency depreciation, we could see that it was weak fundamentals that lead to currency depreciation. And between 2015 and 16, China as well as the US were repeatedly battling with respect to currency's value. In 2015, China has devalued its currency. And that was by roughly 2% of 2% against the US dollar. Chinese officials said the move was required to prevent further slide in its export. That was just to prevent its own economy that the China went through depreciation. In 2019, Trump administration labeled China as a currency manipulator. In 2018, US-China political uh, relationship turned towards protectionism, which resulted in long-term trade dispute between these two world chains. Coming to the volatility with respect to currency depreciation, we could see that currency depreciation would definitely lead to volatility in currency in the international markets. Among most notable was the Asian financial crisis of 2000 of 97, and that has triggered the collapse of the Taiwan, that created a sharp devaluation in most almost South Asian countries as currencies as well. And we could see that in another case, currencies of nations such as India, Indonesia, etc., also suffered problems. On June 23rd of 2016, the British pound depreciated over 10% against the US dollar. Some examples of currency depreciation involves Turkey's currency lira. It has lost more than 20% of its value. A combination of factors led to the same. There were investors becoming fearful that the Turkish companies wouldn't be able to pay back its loans. And also, Trump approved the doubling of steel as well as aluminum tariff. And again, there was another problem, like another cause, like Turkish president did not allow Turkish central bank to raise its interest rate. So all these factors led to depreciation kind of thing. In October 2020, the lira sank to historical lows. It dropped beyond 8.05 to US dollar. So that's all for today. Please like, share, and subscribe this channel for more videos. And I request you to join my Telegram group and Telegram channel. I'll be providing the links of the same in the description box. So please do join. That's all for today. Thank you.